Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 4th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. Ed, how are you doing, bud? Good to see you.
Good to see you. Earnings season is back, so we're back.
It's back. So, what do you have on deck for us today?
I want to take a look at a few stocks, JPMorgan, Delta Airlines, and BlackRock.
All right, well, let's start with JPMorgan Chase. That's its Christian name, I hear. The company is scheduled to report Q3 earnings on Friday, October 11th, and earnings are expected to fall 8% to 3.99 per share, while revenue is expected to rise 4% to $41.44 billion. And here's why we're watching JPMorgan. We're going to be wanting to pay attention to net interest income and that net interest income outlook, including the Fed rate cut impact. On the consumer lending side, we're going to want to see what they report in both growth and delinquencies defaults. So, Ed, I think the general expectation here is that these earnings might contract because of Fed rate cuts. But last quarter, JP Morgan saw a big surge in investment banking fees. They were up 52% year over year. They saw a 21% jump in equities trading revenue. And as we know, of people that have been following along here, the financial S&P 500 ETF has been one of the top performing sectors this year. So, what's on your radar as JP Morgan gets ready to report?
Yeah, first, I mean, this is sort of like the first week of earnings cheat sheet for a while, and that reflects the beginning of earnings season is important, those first couple of weeks, because that sets the stage. JP Morgan is the first of the banks. There's also Wells Fargo, which we'll probably look at too, but get an idea of how those bank earnings are, what they're seeing. You talked about trading revenue, net interest income, and all these things. So it's really important, not just for these particular stocks, but for the broader market, for the sector. JP Morgan, yeah, I mean, they had warned a couple of weeks ago, and you can see that there was a big drop a couple of weeks ago when they said, yeah, net interest income may not be as good as you think. And so that's one reason why it's a concern. That's one reason why it's been lagging. Yeah, trading revenue, it'll be interesting to see because that can fluctuate. That can often be an X factor because people can sort of look at the rates and get some idea about how some of the other things will happen, but you never quite know about the trading revenue. Yeah, I mean, with the Fed, it's interesting because banks had this long run. They do have trouble making long runs, and so maybe banks are going to take maybe they're going to need to take a more of a break. We've definitely seen other parts of financials do well, like insurers are continuing to do well, but the major banks not as much, in part because yields are coming down a little bit.
Right. And as we take a closer look at the chart here, Ed, as you mentioned, we had this breakout here at the end of August. We hit this 225 high, but this September 10th day, that's when they cautioned again against that net interest income outlook. And, that really was a decisive close beneath that 50-day line and really just trying to make its way back, but getting rebuffed there. So, what are your thoughts then, Ed? Earnings are approaching. What would you like to see happen with this chart?
Yeah, and I just want to make one other point is when it rallied back and it broke out that last time, that whole run was basically in light volume. So you had before that there was a high volume break, then it goes up on light volume, and then it breaks on high volume, and now it's stuck. So we needed to see it get back above the 50-day line. Really like to see some volume because haven't seen, there's been a day or two, but those weren't like dramatic moves. They didn't really change the picture on the chart. So a dramatic move, get it back above those levels. Uh, then maybe there could be an early entry, but it's probably more likely maybe need to see it build out a base a little bit more because it hasn't had the greatest trading trading activity recently.
And just want to hop over and look at the weekly because, as you mentioned, we've had this great run here, but perhaps maybe needing some time to digest. We can see earnings also decelerating here as well. So, any thoughts, Ed, on the weekly chart action here?
Yeah, I mean, it shows the same. It's had that run. Now there seems to be some more weakness lately. And as you said, that's a great point about the earnings. That the growth is decelerating, it's supposed to start being choppy or fall. I mean, that's just a pattern here. The fundamentals are not going to be as strong. The technicals look a little weaker, and it's just something that maybe there's been a bit of a character change in JP Morgan and some of these other stocks.
All right, Ed. Well, let's move on and take a look at Delta. The airliner is scheduled to report Q3 earnings on Thursday, October 10th, and earnings are expected to fall, or shall we say, descend 25% to 152 per share, while revenue is expected to decline 17% to $2.24 billion. And here's why we're watching Delta. We'll want to see if there's any outlook on lower fuel costs, and we'll also want to key in on any comments related to the Boeing delay and the CrowdStrike outage hangovers. So, Ed, we've been kind of seeing maybe some momentum with some of these travel stocks and airlines, thanks to maybe lower rates. Delta has definitely benefited from some improved travel demand. But what are your thoughts here with Delta as their earnings approach?
Yeah, I mean, there's definitely been a lot of travel stocks have done well, so that's been a positive. The airlines for quite a while were sort of laggards, and I think part of that there was higher fuel costs. And there's other factors going on as well. Delta also had issues with the CrowdStrike. There's been some outages that didn't help them. But then the lower oil prices, that I think has been one reason that. So now all of a sudden they were becoming a tailwind. This week we've seen oil prices surge again. So that could be an issue, and just Mideast concerns, like is that going to cause any kind of disruptions if you see a wider conflict? That's an issue. So we'll just have to see because the earnings aren't going to be so great. But are we going to see a turnaround? Are we going to see that bounce back? Supposedly the earnings are going to pick up again in 2025 after sort of a flattish year this year. That's after a big gain in 2023. So sort of steady this year, maybe a pickup next year. So people are going to be looking ahead to see, can we see that kind of uh, we're going to see that, want to look for that outlook, see if we can generate honestly that the margins, uh, going forward.
And right, Ed, as you mentioned, we're taking a look at the daily chart here, officially working on a cut base with a 53.86 buy point. But we've really seen this fall off here over the last week. So is that technical action a cause for concern here? Or what are your thoughts on what's going on with the chart?
I think this is one of the situations. If you don't own it, this is probably positive. It's concerning if you bought it and bought it fairly recently. But the thing is that this had run up and was pretty extended from the 50-day and 200-day lines. And so it gets a little nervous if you go all the way up and break out because yeah, that can work, but it can also pull back and shake you out. So it's nice to have that shakeout beforehand, before you've gotten in. So now actually after, going forward from this point, it should have a handle from the top of that little thing. This is the fifth day of a pullback, fifth day of that handle. So that will be the official buy point. Now it started the handle going down and needs to go up. It's not a handle until you actually see that other side of it. Really, I mean, it's going to be a handle, but it won't really operate it. So you need to see that come back up because it has been sort of steep. That'd be a pretty decisive, it'd be a pretty sharp break, but maybe it could consolidate or move a little bit higher heading into next week with earnings and then maybe make a move. And, if it moves positively, it might offer an opportunity, but if it doesn't, then you can just say, well, I'll let that one slide.
Yeah, just let it fly on by. All right, Ed. Well, let's go to the next name on our list, which is BlackRock. That company reports earnings on Friday, October 11th. And the investment banking firm is expected to see those Q3 earnings fall 6% to 10.23 per share. And analysts expect revenue to climb 12% to $5.05 billion. And here's why we're watching BlackRock. We'll want to know more about BlackRock assets under management and particularly how those Bitcoin ETFs are doing. So Ed, BlackRock's been kind of interesting. Their overall performance has gotten a boost by some recent partnerships, particularly with Partners Group Holding. That was some improvements to their platform there. But what are your thoughts here with BlackRock and what stood out to you?
It's been one of those more, it's among the alternative asset management firms, it's a giant. I mean, it is really enormous company, 140 billion. It really dwarfs a lot of those others. The revenue and earnings growth has been solid. This is a steady grower. This is one of those kind of things. Hey, even though it does some big swings on some of these assets, but it's been it's also like it's in a lot of trends. The relative strength line has been pretty positive. it isn't really offering an opportunity right here. I mean, it sort of had some chances along the way, but it feels extended at this point. But this is a leader in that financial group. This is a financial stock that is really working well. And it's also been one of the Bitcoin leaders. It actually is the one who it's ETF iShares Bitcoin because it owns iShares, which is a pretty big ETF. So IBIT is the Bitcoin play that often people will use now as the go-to because it's one of them it has among the better flows. So how are those flows going? Is that continuing? Because some of it may have been a flow from other funds rather than new money. So is new money continuing to pour in to those Bitcoins? But that's just a small piece of it. That's I know that's sort of fun, but that's like a little tiny piece of this gigantic multi-trillion-dollar assets under management company.
No, like you said, interesting to watch. And I'm toggling over to the weekly chart here because, as you said, it's really had a nice run since breaking out of this flat base with 845 was the official buy point there. We saw some tight action here. And as you mentioned, not really a lot of opportunity to get in or add to that position. So, what are you hoping to see then as earnings approach? How can investors perhaps maybe play this one to hopefully add on or get in?
Yeah, I don't really see a good opportunity. Maybe if it pulled back over the next week or two or something, maybe you could come down to the 21-day line or something and use it as an add-on buy. I don't really see a position trade out of this one, like a new position, until maybe it comes down to the 50-day line, 10-week line. But you wouldn't want it to come down in just the next week, come down that considerably and then go up. So I think that you'd want to need for new investors, we're going to need to wait for like a probably a more significant pullback or base.
And Ed, I want to take a look at XLF. That's the Financial Select Spider. And, I feel like you and the IBD Live team, this has been kind of a common one being brought up. It's been performing really well over the last year. It's basically on par with the S&P 500 this year. So what are your thoughts about financials in general and what these big earnings from JP Morgan and BlackRock could potentially mean for this sector?
Yeah, it can mean a big deal. I mean, those aren't necessarily like BlackRock is a leader. JP Morgan has been lagging lately, but these are two giants. And remember, JP Morgan, there's going to a lot of the other big banks are going to be coming in the next week. So it's going JP Morgan is likely to move a lot of these other banks. So you could see a huge move in XLF this next Friday and in the following days after that when some other reports come in. It's a lot of it's been insurers that have been doing well. There's also some credit cards in this, which are a little bit mixed. But Berkshire Hathaway is the largest component in that, of course, and Berkshire owns a lot of banks stock, so it's a little bit of a double whammy with that. So there's a lot of this has been a very solid sector, and so I think investors, growth investors, active investors are often looking. I want to look at growth tech stocks, but you need to be looking and seeing what's working. And financials have been a successful area for the past several months.
And Ed, I just want to show this is a handy little comparison chart here that we can set up in Market Surge. And just kind of looking at XLF, we can see JPM doing well, BlackRock doing really well there. And let's just go ahead and throw in the S&P 500 here, just see how it stacks up. So we can kind of see over the last 52 weeks here, again, just to hammer your point home, financials been looking pretty good.
Yeah, and while JP Morgan is laggard lately, you can see it's been doing pretty well. It's only that last couple weeks. So we'll have to see if that can get better. So but yeah, it's been outperforming XLF, it's been outperforming the S&P 500. Definitely, yeah, very good point. It's nice to see this feature, yeah, to use that comparison feature.
Hey, we're pulling out some new tricks here for this new season of earnings cheat sheet. So Ed, that was some of the big names on our radar, but as always, we're going to want to take a look at a couple more. And you mentioned Wells Fargo because they also have earnings coming up next week. We see it in consolidation here with a 62.55 buy point, and looks like it's really trying to maybe get above that 50-day and 200-day line. So what are your thoughts here on this chart?
Yeah, it really has been struggling and it lagged for quite a while. While others were moving higher, this was going sideways. It sold off like a lot of stocks in early August and it really hasn't done great. It came back up and then sold back off again. And so it keeps on hitting resistance. It needs to show some real strength. I think you'd want to get above the 60 level before you'd be interested. You want to see some better results. This just seems like a laggard when the big banks are starting to lag. So why would you want the laggard in in a quasi-lagging area? That's not doing great.
All right, well, let's take a look at PepsiCo, Ed. And this one looking in a cup with handle base 180.91 buy point. Why looking at PepsiCo here?
You know, this had been doing pretty well for a while, and there have been a lot of the food packaging. So just have to see if that's the because this is really more of a snack company than beverages. Plenty of beverages, but they're more like Doritos and all those kind of things. So to see how that area has done well, and again, if we go more defensive, which we haven't been, then we're in a market rally. But if we go more defensive, names like this might outperform again. It's not outperforming right now. You're not going to see tremendous growth with a company like this. Um, but it's just one to know because it will be it's the first of the sort of the food and beverage names.
All right, well, let's head over to Taiwan Semiconductor. And, they don't have earnings for a couple weeks, but they will have some sales numbers anticipated next week. We can see it tried to break out here of this cup with handle and trying to move out above this buy zone here. So, Ed, what is any updates or news with Taiwan Semi?
Well, look, Taiwan Semi makes chips for NVIDIA and Broadcom and Apple and a bunch of others. So its sales and its been sales have been driven by those high valued, high priced chips from NVIDIA and other AI tape names. So its sales are important. It's also important for all the chip equipment makers that Taiwan Semi buys from. It's one of the biggest buyers of chip equipment. So a whole lot of companies rely on it. Now, some of that will come with the earnings and the earnings guidance and the capital spending guidance in 2 weeks, but that still really matters. This one's in a buy zone. It broke out a week or so ago, then it sold off in a sort of ugly fashion, came back up last couple of days and is in a buy zone, or you could use the top of that as sort of a new sort of handle or as an add-on thing, but it's acting pretty well. It's getting helped by some positive vibes from NVIDIA. Let's see if Taiwan Semi can share the vibes back to NVIDIA.
Yeah, and to add to those vibes, we saw Jensen Huang, the NVIDIA CEO, basically come out and say that demand for that new Blackwell set is off the charts. So hopefully that can boost Taiwan Semi here. And I want to take a look at Tesla Edge just to wrap this all up, because again, earnings aren't due, but we have this long anticipated, awaited robo-taxi event next week. And this follows some Q3 deliveries that were in line with Wall Street expectations and some news that we're seeing the Model 3 perhaps no longer available for order deliveries because of tariff issues. So we see Tesla here at its basing. What are your thoughts and what are you going to be looking for as this robo-taxi event
Yeah,
comes up?
the deliveries were in line, but maybe less than people would really hope. There were whisper numbers that it would be better. On the Model 3, they've discontinued the low entry, and part of that is tariffs because it was using batteries from China, and so it wasn't getting the tax credit. So people weren't really buying it because even though it was cheaper, it wasn't cheaper once you consider the tax credit. So that was an issue there. There's been some other piece of news, but the robotaxi is huge. Look, Tesla is an EV maker, but the stock clearly a lot of its value is on the hopes that full self-driving will become truly self-driving, that there will be, and then that'll be low cost, and we've talked about it, and that'll just, to be able to blow out the other robo-taxi ventures out there. And it's not there right now, but that's where the hope. So it's really important. So they will probably show off a concept car, probably will work. It's going to be driving around a studio lot. So it's not like that it's not like it's self-driving. It'll probably be able to conduct this course without problem, but you can't, it's not the same. So it's not clear what that'll be. They may show off the robot. I wouldn't be surprised if the robot is quote unquote driving the car, you know what I mean? And then coming out of the car. I don't know. Maybe the biggest thing won't be the robotaxi. Maybe it'll be they'll show off the affordable car like the Model 3, Model Y hatchback or whatever that there's been rumors about. So, so it is a lot of wild card and it's hard to know. I mean, I'm sure Elon Musk will say he's going to be very bullish on it. Hey, it'll be coming, but he said those things before. So it's hard to know how the market will react. I mean, the market might say, hey, that's great. I'm really excited. Excited. It might say, we've heard this before. It seems like it's years away. Honestly, I don't know. But I know that's a long-winded way of saying, boy, is it a wild card. I think the chart is looking interesting, though.
The chart is looking interesting. It's setting up here, and it was funny because Jim Ropel earlier this week on his monthly market report with Alyssa Coram, you can check that out at investors.com. He took a look at this and was like, it's setting up, but maybe not for me here. But what do you think, Ed? Because this could potentially give investors a way to maybe get in before earnings, or how would you be looking at this as we have kind of those two key events approach?
Yeah, I mean, and the earnings will be on 10/23, not 10/16, just to be clear. So it's a couple weeks away. After tomorrow, it should have a handle on a weekly chart, and after Monday, it should have a handle on a daily chart. So you can just you can see how it's there. And so that's been positive because it was running up, and it was going to be very extended. If this had broken out on deliveries right ahead of the robotaxi event and being like 25% above the 50-day line, it's just like, what do you do with that? I think that maybe I'd be curious to know what Jim Ropel thinks now, because now it looks a little bit better. Now it's not as extended. Now it could rent a lower buy point, especially if it broke out on the robotaxi news. And so that's just something to keep in mind. I don't think people want to do anything unless you're doing some kind of option play. You have no idea where this could go. Let's look at this chart. This stock can make moves of 20, 30% in a few days. It can also drop that kind of way in a few days. So I don't think it, just in general, and this is not how it does, like it's a stock that you don't really want to be messing with ahead of such massive news. I mean, this could be something where, aha, finally the doubters are overcome. Ha ha, here we go. Boom, boom. And it's like, oh no, it's not, and I don't know. So I just think that see if it can form a handle, see how it acts with the robotaxi news, and then maybe there'll be an opportunity, or maybe not. It'll be like Delta. It's like, oh, it didn't break out. Well, okay, I guess I skipped that.
All right. Well, we'll definitely be watching, and I'm sure investors can look to your reporting as well. The whole IBD team will be covering that event next week. Well, Ed, it was great to see you, and thank you so much for your insights today. That wraps it up for this episode of Earnings Cheat Sheet. If you want more market analysis, you can tune in to Stock Market Today with Alyssa Coram. That goes live after the closing bell. And thanks so much for watching, and we'll see you all next week.